quiz. Basically, there's what we call as a spending multiplier vis-a-vis tax multiplier. Remember from the aggregate demand, aggregate expenditure, that every increase or decrease in spending, the aggregate expenditure is equal to C plus I plus G plus net export, right? Every increase on this will be multiplied in the real GDP. Okay? So for example, if the multiplier is 5 and there's an increase in consumption of 100, then the net effect in the real aggregate real GDP will be 500. 5 times the actual increase of the expenditure items. But okay, it's not gonna be the same between tax multiplier and spending multiplier. Why is that the case here? We know that from previous week that in general fiscal policy can be carried out through both government expenditure or spending or tax. Okay? However, the two would not result the same. This is very important for you guys. So for example, expansionary fiscal policy to close fiscal gap, that is an example of 100 billion, can be done through increasing government expenditure or reducing tax. Say say for example, first is the expenditure. Government, instead of opting to reduce tax, it increases the government expenditure. So with the gap spending of 100 billion and MPC is 0.8, so we know that the increase in spending must be gap divided by multiplier. Why is that the case? Gap is equal to spending multiplier times the increase in spending. Okay? With gap 100 billion, then increase in spending, if we arrange this equation here, is going to be equal to gap divided by multiplier, right? So for example, spending multiplier is going to be equal to 1 divided by 1 minus MPC, yeah? Everyone follow here? So 1 divided by 1 minus 0.8 or 1 divided by 0.2, which is 5. So the increase in spending should be gap divided by multiplier, which is equal to 100 billion divided by 5 is equal to 20 billion. Everyone follow, yeah? Jadi how to close the gap. But what about tax? Is the amount required to reduce the gap will be similar of 20 billion? It's not the case. Why is that? Now if the government opt to reduce tax, yeah, remember, yeah, every tax deductions that will be given by the government, it will not end up as spent. Okay? For example, I've got like a tax rebate from the government deductions of 10 billion, yeah? But that 10 billion will be translated into as my income, additional income. But that income is not going to be spent all of it. Correct? Yes? Depends on my MPC. Okay? Some of my additional income will be end up in my saving. Is that clear? For example, I've got like a 10 million increase in income, yeah, because of tax rebate that provided by the governments as a part of fiscal policy. Not all this 10 million will be end up into my consumptions. In other words, the additional consumptions that I've got is not going to be 10 million. Why is that the case? Remember again, because some of this 10 million is going to be end up to my saving account. Yes, good. So for example, my MPC here is 0.8, yeah? My MPC is 0.8. So this 10 million, how much is going to be end up in my expenditure? It's going to be simple 8 million. Yeah, 2 million will be in my saving. So if that's the case, then if in the case of the fiscal policy, if we want to opt to, if the government opt instead to reduce tax instead of increasing government expenditure, then we're going to have a separate, different multiplier, which we call as a tax multiplier. How much is the tax multiplier? How different is the tax multiplier and the expenditure multiplier? You can see that. So see again, the amount of tax that will end up in the spending would be MPC minus MPC, remember the minus, okay? Because it's a reduction in tax times the spending multiplier. Or tax multiplier is equal to MPC times spending multiplier. So spending multiplier times minus MPC is going to be the tax multiplier. Okay, this is an example. Recall that spending multiplier is equal to, this is normal multiplier, 1 minus 1 minus 1 divided by 1 minus MPC. Or as MPC is equal to MPS is 1, then spending multiplier will be 1 minus MPC, 1 divided by MPS. Everyone following here, right? Thus, the tax multiplier will be minus MPC times 1 divided by MPS, or tax multiplier is equal to MPC minus MPC divided by MPS. Okay, the key is here. Spending is not gonna be, like the tax reduced, the tax rebate will not be end up all in consumption, but only some of this by the amount of MPC. So this is why there is a negative MPC here times spending multiplier is gonna be equal to tax multiplier. Continuing to our example, because MPC plus MPS is equal to 1, then tax multiplier will be minus MPC times 1 MPS, or equal to, this is the end, and minus MPC divided by MPS. So we have MPC of 0.8, so minus MPC is going to be minus 0.8 divided by 0.2 is 4. Again, yeah, so you can see that the tax multiplier is slightly lower than the spending multiplier. That is why to close the GDP gap with tax require an additional 5 million amount more. So instead of 20 billion, if we spending, if we use taxes, if the government use taxes, it requires 25 billion. Yes? The lesson summary is the tax multiplier is different with spending multiplier. Agree? Yes? Okay. Can you pause?